This is the S&P 500 one-month overview reading for the month of October 2023. It's currently August 25th, 2023 at 7:43 p.m. Eastern Time. The S&P 500 at the time of this reading is 4,405.71. And the shuffle file for the October reading was created on August 1st, 2023 at 1:09 p.m. Eastern Time. That's this video right here. So the overall theme and behavior for the month of October, there's a significant support level on a year-to-date chart. Frankly, this is a cross-reading congruency with the low correlator on the 1 year. And there's already strong indication of us seeing a low here in September, October. But I'm leaning towards October. A lot of that having to do with the fact that the theme card here is the cross-reading congruency for the low significator on the 1 year. So we're very, very strong possibility that we see the low for the year here towards the end of the month of October. And it's crossed with an important resistance level on a year-to-date kind of scale that we might be able to position ourselves in both directions around that resistance level. Behavior around the highest high for the month of October. There's a U-shaped dip that forms near the intersection of two perpendicular diagonal trend lines. So usually when you see this in the high correlation position, there's two highs with a trough in between. But sometimes you get like a double top high where it's like the same high, but you see it like a U-shaped dip at the top on like an intraday kind of chart. My sense is that we probably see the high twice in the first week. It's possible that it's once in the first week and then maybe here on the 12th, but I think it's probably twice in the first week. And then this Ace of Swords in this case is more of like a mean point between like a high and a low, possibly. I don't know. It's hard to say. But with that said, we get into the lows at the end of the week, of the third week, I should say, and then possibly lower lows in the fourth week. Behavior around the lowest low, we have a sideways rotation along a key support on a year-to-date kind of scale, increasing with, looks like, bearish momentum into the low, and we more than likely see a lowest low here, like thus far lowest low here on the 19th, and then either the same low here on the 24th or it'll be a lower low on the 24th. And then we've got a cross-reading congruency here with the low correlator on the 1 year as well for the cluster of October, right? We've got the failure card here as a cross-reading congruency, so it's even possible we see a low here at the end of the month. I don't foresee this being a highest high. This is more so going to be like a prominent high or a new local high here on the 30th. All right, so we're going to get into the day-by-day chart behavior in just a moment. Before we do that, I want to just take a look at our August reading and see how we've done thus far. Right, so we had this like high the last day of the prior month, so we nailed that. And then there was another high on the 9th. Looks like we were off by a day there. It ended up being on the 10th. Still pretty solid. And then we went into a lowest low on the 14th. Off by a day there. Down to a lower low on the 21st. Off by a day there. It looks like everything's off by 1 day, but the sequence of events is pretty solid. We didn't end up having another shot at that low on the 23rd, but we did have a notable decline off of this resistance here. And then we should see what happens on my sense is that we probably have a pretty significant high. We probably have a high up here in the 445 range on the 28th, followed by a significant decline. This should be a pretty big day with some like back and forth action, but this is looking like a pretty solid. When I'm talking about a 1 month and I say that the high significator offers an important trade opportunity that'll stand out on a 1 year chart, that's what I'm talking about, guys. This is the top. The trade opportunity at the high in August was basically off by like a day as far as the top. So that was not just a good opportunity at the top of a month, which basically you could say there's a good opportunity at the top of every month at the high. That's not really the case, but you could technically say that if you wanted to be a cynic. The point is that this is an exceptionally notable trade opportunity here because we're going to go into the lows, so that's pretty solid. The lowest low behavior into the lowest low was also a decline off of a peak or crest through multiple support levels, and it was an overbought peak or crest, or near overbought peak or crest, I should say, which is also holding very true. So this is really holding up, guys. And if you're wondering, the August reading was created May 23rd, 2023 at 10:21 p.m. Eastern Time. Now, when we're looking at the 1 year, we're also pretty solid. We had these high in July, on the cusp of July, August, and then we went into this major decline, and then it looks like we should go into lowest lows for the year here. It's going to be in October based on what I'm seeing with the cross-reading congruency, and the fact that September's kind of got like this bounce, this like move to the upside in it that kind of like cools off the decline before further decline into the lowest low for the year. So this is looking really solid, guys. The 1 year also, if you're wondering, was created October 26, 2022 at 10:05 p.m. Eastern Time, still being used today, my friends, over almost a year ago. All right, so let's get into the day-by-day chart behavior. Matter of fact, before we do that, guys, I know everybody thinks it's wonderful that we've got this 98% average accuracy, we're giving this stuff away for free. But the thing is, we're not giving this away for free, guys. We're expecting that people are sending 5% of the profits that they make from this information forward to a charity. And you can do that on the resources tab of our website, Tarot for Traders. Right? You're sending 5% of the profits forward, paying it forward, keeping the flow of the in the universe going. You're also guaranteeing abundance mind, and you're taking some of that competitive energy of the stock market and effectively transmuting it into goodwill. This is one of the best things you could do for the world. And then 5% of the profit should be donated back to the channel to keep the channel going. For whatever reason, this stuff works for everybody but me. It's probably like a multi-lifetime kind of safety guard against me getting like too into my ego and getting lost or something. But for whatever the reason is, I'm counting on that 5% to keep the channel going. And that leaves you with 90% of the money. Guys, 90% is a ton. Make sure to spend that money out of love. As long as you follow these rules, that's the rule of karma for the channel. That's what we're expecting. It's not free per se. We're expecting you guys to follow through on your end. And with that said, you do that here at the resources tab. Much appreciation to all my angel investors doing that. We call you guys angel investors because you're investing and you're also my angels and somebody else's angel, provided you're following that rule of karma. All right, so you can see like September, there's this notable move to the upside in there, and then back into decline in October. So it looks like we have a high at the very beginning of the month in the midst of this Ace of Swords. There's definite correlations here between the highest high and you could call them secondary correlations. These hold the same correlation to the same card, both the highest high significator and this card. So this card correlates to the highest high and also to the things that also correlate to the highest high, if that makes sense. That's the strongest way to find a highest high or indicate a timing location, if you're wondering. So highest high here also offers a trade opportunity. Normally we talk about the trade opportunities in the paid version, but because this is the S&P 500, we do the S&P 500 for free. So what I'm about to speak is an example of what we would talk about in the paid version when you get a paid version of any monthly reading, I should say. So the trade opportunity here on the second, it's in the midst of a sideways S formation within a channel. So we've got this rally on a multi-day scale on the second into a highest high. And on a 1 day chart for the second, there should be a resistance and a support that we decline from the resistance, meet the support, reverse, go all the way back to resistance, reverse, go all the way back to support. It's usually horizontal support and resistance, but if it's a really strong trend, it could be to the downside. And so on a 1 day chart, you're looking for that type of chart behavior in order to get into a short position. You would effectively hold that short position. There's a couple places that you would want to exit out. It depends on your risk tolerance, because the longer you hold a short position, the more likely you are to lose money. That's why it's called the short position. So we'll get into those exits as we go through the reading. So on the third, we got this peak. We go from this rally on the second into a peak on the third that we sell off from pretty notably on a multi-day chart standing out, and it takes us into an important trough that'll stand out on a multi-day scale. Not a lowest low, but a trough that will stand out. We rally out of that trough into the fourth, and then that rally ends on the fourth, and effectively we decline into another trough that'll stand out for the month. So two like prominent troughs next to each other back to back. On the fifth, however, we have out of the decline a big move to the upside, especially early in the day, taking us to a important resistance level at the end of the day at a peak or crescent. This may be where we have a high side. This isn't as strong of a probability as the second. I'd say the second is the strongest probable location of the high side, but this is close. We may see the high side again here, or it'll just be a really prominent high that stands out. But the rally then continues into the 6th, where we have a rally increasing with momentum moving forward into what may again be the same high that we had on the 5th. So it's like a double top there, which is part of why I say it could be a highest high, because what I was talking about as far as a double top near the behavior around the highest high there. So we have a double top where we go from a high a few days later to a high, and then the second high is kind of like, really it's two highs kind of split side by side, which is another double top, and that's very characteristic. You'll see both options kind of play out. On the 9th, we have an important resistance level that's highlighted. I'm advised first off on the 6th not to chase that rally. It looks like the peak is early in the day. We may even have a notable drop at the end of the day. It's kind of hard to say, but there's a resistance level on a multi-day scale that's important. That's highlighted here on the 9th. We've met it many times before and failed to break through it all of those times. On the 10th, however, it looks like we do break through that support level, at least momentarily. End of day, there's a pretty sharp drop. Looks like we probably gap up on the morning of the 11th, and then there's another sharp drop in the morning of the 11th. On the 11th, we have sideways fluidity, equal amounts of bulls and bears inflow and outflow there. So the energy or the price level at the beginning of the day of the 11th is usually the same kind of price, around the same price level that you see at the end of the card, at the end of the change card. So wherever we're representing the day of the 11th, so the beginning of the day of the 11th and the end of the day 11th, very likely around the same price level. Either that, or it's been like some really crazy sidewaysy behavior, like price swings, in which case on the 12th, there's an important resistance level highlighted on a multi-day scale there, and a lot of price change. Often a Ace of Swords is going to indicate a highest high. It's not always. Very often the Ace of Wands indicates the highest high, but in the case of this reading, my sense is that it's not so much a highest high. It's more so like a midpoint, which you could place you could make a trade into this, but I probably wouldn't try and be that nimble around the low here. I'd probably just look for a good opportunity to position myself in a long position for the long run. But if I did want to play the, be more nimble, I could position myself in both directions here through in the amount of price change that takes place here on the 12th. There's also a day trade opportunity. It looks like a brief peak on a one-day chart on the 12th that's easily missed as an opportunity to open up a short position, followed by we decline. There's two local lows on the 12th. So what I mean by a local low is when you're looking at a one-day chart of the 12th, there should be two troughs that stand out. One will come from a really sharp drop. The other one will involve a notable fake out. These are sharp drop and fake out on a one-day chart, not a 1 month chart, a one-day chart. And it looks like near the lows, there's sideways rotation along a key support level on a one-day chart again. That's where you would exit the short position for that day trade on the 12th. You could also exit your short position that you opened on the 2nd, but there's better places to do so. It's just a matter of if you have enough risk tolerance or not. But if you're not strong in the risk tolerance department, I would say you probably want to get out here on the 12th, or at the end of the day on the 13th after a rally that ends with a decline through key support. Again, a brief peak that's easily missed on a one-day chart, followed by a decline, a sharp drop into a low on a one-day chart there on the 13th. On the 16th, unicursal energy, there should be a really notable drop probably over the weekend of the 13th into the 16th with continued declines into the 16th, where we revisit a support level that we met recently. It could have been at the end of the month of September. Hard to say. It'll make more sense when we're there. But on the 16th, we declined to a key support level on a multi-day scale that we met once before recently. And there's a pretty big move to the upside at the end of the day on the 16th, or overnight. There might be a gap up to a crest that we then sell off from on the 17th, pretty notably early in the day. A gap up again on the 18th. But with a peak at the beginning of the day and a significant sell-off, a lot of decline, a lot of price change to the downside here on the 18th, taking us into the low. And the Emperor card, it indicates an important support level on a year-to-date scale in the case of a 1 month. It's a year-to-date kind of scale, important support level that will be highlighted here on the cusp of the 18th, 19th. And that's where we'll see our lowest low. It may be the lowest price level for the month, or it may be our lowest low thus far, and then we see a lower one on the 24th. It really depends on how far we've gone thus far. Like if we're already at lows for the year here, I would say this is probably where we'll bottom out and we'll see it like retest it here on the 29th. But if we haven't reached lows for the year here, there's a strong possibility that the 24th is going to be lower. Same kind of scenario for the 24th versus the 27th and the 30th. All right, so on the 19th, a failed attempt to break through key resistance and then a decline through key support. Looks like that probably takes us into the low. It's either that or we come out of the low, there's a failed attempt to break through key resistance and a decline, but then in that case the decline wouldn't take us quite to the low again. There's a period of volatility on the 20th that ends with a fast sudden move higher, and then we likely open lower on the 23rd with a big move to the upside out of oversold territory. And then on the 24th, like I said, we either revisit the same low or we see a lower low here on the 24th. I'd say it probably has a lot to do with where we open on the 23rd. But there's a significant low, a lowest low, or the same lowest low here as the 18th on the 24th, and there'll be a pop and drop in the midst of that low. A lot of price change on the 25th, rallying into an important trough or a new local high on a 1 month scale there on the 25th. So what I mean by a new local high is it'll be the newest, it'll be like the newest high since all the lows have been formed. It's not a highest high per se, but it'll stand out pretty significantly. It'll be a big move moving into that high, most likely towards the end of the day on the 25th. On the 26th, there's erratic behavior back and forth through the same price level. In the midst of that erratic behavior back and forth through the same price level, we revisit a crest that was recently a past opportunity. It could be the crest from the prior day. On the 27th, we have a notable decline through multiple support levels again, taking us to a key support level at the end of the day. This is very likely another location where we either see the same low or we see a lower low. I think the strongest probable location of a lowest low is here on the 24th. This is going to be a lowest low thus far, very strong indication of that. Whether or not it's a lowest, like it remains the lowest price level throughout the rest of the reading, probably not, but it could be. I think the 24th is probably our lowest low, and then we would maybe revisit it again on the 27th or the 30th. On the 30th, another important local high that forms there early in the day on the 30th in the midst of some sideways fluctuation to the upside that precedes a decline, and then we have another trough at the end of the day on the 30th, which if it holds true, it'll be the same price level as whatever this support level was at the end of the day on the 27th. Remember, we're seeing sideways rotation near the low, so it's very, very likely in the type of chart behavior that you see with sideways rotation, it's very, very likely that we see the low more than once or multiple times. And then on the 31st, we have a big move to the upside. I'm advised to be very cautious in November. Multiple false tops or bottoms, tricky chart behavior. We'll look into that in more detail when we get into the November reading. So something that does make me think that maybe these are lows here is first off the cross-reading congruency. And then also we've got a trade indicator here. We don't really see a trade indicator anywhere up until that moment. So this would be the ideal location, I think, to close out of a short position at the end of the day on the 27th or on the 30th at a low. But that's if you've got a really strong risk tolerance and you're playing speculatively. You could probably get out on the 24th at a good price level. You could probably get out early in the day on the 19th at a good price level. The sooner you get out for a profit, in my opinion, the better the short trade was. It's not that you wouldn't make money holding it longer. It's just it just becomes extremely risky. It's the end of Mercury retrograde. Short positions are notoriously speculative to begin with, and the longer you hold a position, the more life happens, and life can really take you in crazy ways, and you could be right and still lose money depending on how what transpires in life. Matter of fact, there's another swing trade, a short at the beginning of the day on the 11th. Open up a short position at a peak or crest early in the day on the 11th and hold that short position until the end of the day on the 13th. That's also another location you might exit the short position from the second. There's a trade on the 17th early in the day in which you would open up a short position. This is a day trade and close the short position at the end of the day after a brief peak and then a decline. That's easily missed, followed by a decline through multiple support levels on a one-day chart. I would exit the short position there. You can open up a short position the following day if we gapped up to a peak again on the 18th. And you can hold that short position until the 19th, the 24th, or the 27th, 30th. From the standpoint of a multi-year, guys, right, we're at the lowest lows. We want to position ourselves to make some money moving forward into higher price levels. That's another thing, is that we've got the solar eclipse here, guys. Solar eclipse have a strong correlation to market crashes and strong reversals. But I would position myself into a long position in the midst of this in the midst of the low that forms in October, and I would hold that long position. Like, I would be looking to hold that long position into the following year, into 2024. Best place to open that long position, I would say, safest location to open up the long position, I think probably on the 24th or the 30th. If we do hit an important support level here at the end of the day on the 18th, I might open up like 30% or 40% of my position. And then if we open at a lower price level, I'd probably open the remainder here. If we open at the same price level, I'd probably open like another 25 or 30%. And then if we opened lower here, I'd open, well, whether or not, I would open up the remainder of the position here on the 30th. And that's the S&P 500 for October 2023, my friends. Make sure to like this if you like it. And if you haven't done so, please subscribe. Really helps out the channel, my friends. Best of luck. Make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one.